15,000 options contracts on PBR, Petroleo Brasileiro. It's a gas company in Brazil. They'll be reporting earnings after hours today, May 11. It is now 12:28 p.m. So in this video, we're going to analyze these unusual options to identify what it means. So at 10:16, these trades were put on at the 22nd mark. You'll see here. This is for the May 19 expiration cycle. And these are the strikes, 12 strike calls, 11.5 strike calls, and the 10.5 strike calls. The 10.5 strike calls were executed at the bid price of 54 cents. The other strikes at 11.5 and 12, they were both executed at the ask price. And keep in mind, the $7 here is greater than this 5. So although it was executed at the ask price, it was more aggressive. They were willing to pay 7 when the market was going for 5, or asking for 5. So they were quite aggressive at the buys for the 12 strike calls. And that's something to keep in mind. And so when we look at the options chain for May 19, expiring 8 days away, you'll see here they are. The strike prices are here, the 10.5, the 11.5, and the 12. And so when we look at the volume here, you'll also notice that all of the volume here is less than the open interest on this column here. The volume is in this column. And so what that means is these trades could be closing trades. They could be closing up their trades that are sitting open on this open interest side. Okay, and so let's analyze this. If they were opening orders, here it would be selling the 10.5, buying the 11.5, and buying the 12 strike calls. And so this is what the trade looks like. We can move this to the middle here. You'll see here we're currently trading at 11.12. The current price is right here in the middle. And as the price, if the price goes down after earnings, it will not be at a loss because we will be above this 0 profit loss. This will be above it. So if it drops below, it will be no loss. And if it rallies, let's make sure to put this at May 11. We'll put it at May 12 because that will be the day when after earnings, when the market opens. So this would what it looks like. That it would gain if it breaks this $12.08 break even tomorrow. So, but if it stays within, if it goes up and stays below about $12, there'll be a slight loss. You'll see this loss about $5 here, $6 there, $5 there, 3, 2. You'll see that dip down below that 0 line of the profit loss. And so if you wait till expiration, if the price is around this range, you'll suffer the most max loss if you wait till the expiration. So if it is trading this range, highly recommend you just take it off after earnings so it doesn't decay through the time decay downward for more losses. If it rallies past this point, it will be profitable. So that's the interesting thing about this trade is there is a, a point here where it is a loss, but then if it rallies past us, this will be profitable. If it goes down, it will also be profitable. So that is assuming that these are opening trades. And if we assume that they were closing trades, we would have to switch these around, and it would actually look like the opposite. It would be very much inverted. As you can see now, it's inverted. So that's also a possibility of that this could be on the other side of the trade. And so that's something you want to take that into account as well. And that it could go either way, right? And that is one of the issues with when you trade with unusual options. You have to look at the volume and then the open interest to decide whether or not these are opening orders or closing orders. If the volume is less, then you have to take into consideration the trade could be a closing trade. Okay, so that's something you always want to take into account if you are using unusual options to trade and set up trades. Okay, so please smash that like button. Really helps our channel grow, and comment below on what you think about PBR. Subscribe if you haven't, and hit the bell icon. You'll be notified whenever we see unusual options. Take care, everybody.